So good afternoon, everybody, and thank you to all of you for joining us for what is quite an exciting moment for us in terms of really sort of setting out the background behind the no interest loan scheme pilot and also the details as to how we're taking it forward so you can help us shape it so that we really extract the most value from it. I'm Sasha Romanovich, I'm CEO of Fair for All Finance. As many of you know, we're an organisation that's been set up for the purpose of increasing financial inclusion, specifically in England. And what's wonderful in this project is we've been able to collaborate with the devolved nations to be able to do something that is actually going to be UK nationwide. Before we go forward, let me just introduce the fellow delivery partners on this pilot scheme who will be sharing insights into the programme during this session. So first of all, Carl.
Hi there, I'm Carl Packman. I'm the Head of Corporate Engagement at Fair by Design. I'm involved in the NILS pilot because testing the ways to reduce the cost of credit for low-income families is absolutely vital for eliminating the poverty premium and those extra costs that many households face for their essentials. So I've been working on issues related to accessing affordable credit for most of my professional life, and this is a subject very close to my heart.
I'm Sian Williams, and I'm Director of Innovation and Policy at the London-based charity Toynbee Hall. We take a lived experience approach to our work and also a very robust evidence-based approach. And I'm delighted that as part of the No Interest Loan Scheme pilot, Toynbee Hall is leading the evaluation and also making sure that we've got lived experience experts helping design. Thanks.
Hi everyone, I'm Kate Pinder. I'm the Director of Growth and Development Programmes at Fair for All Finance. I'm delighted to be leading the NILS pilot with my colleague Georgia Cooley. Really excited about being able to prove the benefit of NILS over the course of this pilot and then to being able to scale it up for the benefit of many people in vulnerable circumstances across the UK and Northern Ireland.
Hi everyone, good to see you. My name is Tom Lake. I'm Director of Strategy and Policy at Fair for All Finance. I've been involved in NILS for a few years, particularly working with the Treasury to set up the pilot from a policy perspective. Going forward, I'll be thinking about how NILS can scale into a sustainable model.
Brilliant. Thank you, team. So that's everybody you've got on the call. In terms of what we want to achieve today, this is really our introduction session to really orient you as to what the pilot's all about, how it came about, and what the next steps are to get your input to help to shape it to be the best setup it can be. In terms of what we're covering today, we're going to be really focusing on sort of three areas. What's the customer need for NILS? The solution that we actually want to test, and how we'll deliver the pilot, and what we need from you to help us in shaping it. I'm delighted that we've got Treasury support for this project. It's been a while in its development, and I'm also delighted that whilst John Glenn is actually currently in the United States as part of the work there, that in between all the changes in government, he found time to record us a video that really sets the scene as to why this is so important. We are aware that if your broadband is being a bit glitchy, and mine's doing funny things, because of course it would, because we've got a webinar, that it might not be as clear as possible, but we do think the messages are really important. So please do bear with us, and we will share the video as part of the recording on this webinar after. Also, just so you know that we are recording the video, the whole webinar, and the aim of our bit is to just be 24 minutes speaking and doing things so that then we can be rich into your questions. So if you do have questions as you go, please pop them into the Q&A. But without further ado, let's hear from John Glenn, the Economic Secretary to the Treasury.
Hello everyone, and thank you very much for the opportunity to speak to you today. Nearly every day in the last almost 4 years I've spent as Economic Secretary, I've heard about the impact of high cost credit on people's lives. I've heard about the sleepless nights, the gut-wrenching fear that payments will go missed. I've heard about the anxiety and the constant calculations about which corners to cut to balance the household budget. And I've heard about the sense of losing control over your life as interest mounts and payments spiral. I'm quite sure that you, as leaders dedicated to supporting people in vulnerable circumstances, will also have listened to people recount such difficulties time and time again. And I know you want to help just as much as I do. That's why I hope you will give your backing to the no interest loan scheme pilot. And I passionately believe that this scheme has real potential to make a real difference to the lives of millions of people across our country. And I care very deeply about its success. And I want to use this webinar to give a short overview of why the scheme is needed before moving on to how it will work and how, through our collective efforts, we can ensure that the scheme fulfills its full potential. So let me first turn to thinking about what's behind the scheme. And I'm sure you're aware of the scale of the issue the initiative has been designed to tackle. According to the most recent figures dated from February last year, 1 in 10 adults used high cost credit in the previous 12 months. This kind of short-term credit can play a part in meeting unexpected costs or bridging temporary losses in income. But it does come at a high cost to those who can least afford it. And in too many cases, it can leave people with debts that they struggle to manage. These consumers need an alternative, but instead they are faced with a choice between sky-high interest rates and being able to buy important household items like a cooker or a fridge. I've long thought that situation is deeply unfair, and that's why throughout my time as Economic Secretary, I've consistently prioritised the expansion of affordable credit. Those efforts have led today to the launch of this pilot scheme. And now I've addressed the context, I'd like to talk a little bit about how it will work in practice. The first point is that this is a scheme for the whole of the country. The pilot will be launched in up to 6 locations in England, Scotland, Wales and Northern Ireland. And a big thank you must go to the devolved administrations for helping to ensure that the scheme dovetails with the support already on offer in each of their nations. And I'll say a few words about the scheme's design. They say imitation is the best form of flattery, and I freely admit that in designing the pilot, we've taken inspiration from the Australian no interest loan scheme, which is introduced 40 years ago and is offered in over 600 locations in that country. That initiative is a clear illustration of the huge difference that a no interest loan scheme can make. In fact, a rigorous evaluation by the Australian Centre for Social Impact found that 8 in 10 borrowers experienced improvements, not just in their finances, but to other areas of their lives. These benefits included higher living standards, lower levels of distress and anxiety, and better physical health. Furthermore, almost half of borrowers said that their financial capability also improved. In fact, after they received their loan, they were more likely to follow a budget, pay bills on time, and build up savings. While those statistics are convincing enough in their own right, it is nonetheless extremely moving to hear the real stories of the people whose lives have been transformed, thanks to the help of sometimes just a few hundred Australian dollars. Just as much as the Australian scheme's results are to be admired, so is the way that it actually operates. It's something that's particularly true of the way it works with stakeholders. Indeed, it is bodies like charities and other organisations that have played an important part in shaping the scheme, ensuring it is truly tailored to local communities or particular groups. Of course, supporting consumers effectively through vulnerable circumstances is difficult and requires expertise. And that's why, as we roll out the UK pilot, it's going to be a priority for us to work with bodies from outside of government. As a result, I'm delighted that Fair for All Finance is to partner with Fair by Design, an organisation dedicated to reducing the poverty premium, and the Toynbee Hall non-profit organisation, which has brought in valuable expertise and insight into the pilot's design and the changing needs of vulnerable consumers throughout COVID-19. And this brings me to the next point, how we can work together to ensure the scheme's success. If the pilot is to fulfil its potential, it's imperative that it works for everyone involved. And that, of course, includes lenders. And on that note, I very much welcome and am mindful of the increased pressure on credit unions and community development institutions right now as they try to offer affordable finance. And I know this money very often comes solely from their own pockets. That's why, in order to lessen the burden on these incredibly important institutions, we think it's only right that the government provides the funding needed to test out this scheme in the first instance. And as a final point, this pilot is just one part of a wider government strategy that seeks to build people's financial resilience. And let me remind you of some of the steps that we've already taken. We've committed to legislation so that credit unions can offer a wider range of products and services. We've accelerated the release of £96 million of dormant assets funding to support Fair for All Finance's inclusion work. In addition, we're enabling working people on low incomes to kickstart a long-term savings habit through our Help to Save initiative. And in May, I was proud that we launched the Breathing Space scheme. It helped those in problem debt gain legal protection from their creditors and gives them time to seek debt advice and find sustainable solutions to their money problems. I'm also looking forward to the implementation of the statutory debt repayment plan, which we're aiming to launch in 2024. So I hope I've illustrated that helping people avoid and, if necessary, tackle problem debt is a real priority for me and the government. And our no interest loan scheme is an integral part of those efforts. In short, I think this is an extremely encouraging and important initiative. I'm incredibly passionate about it, and I encourage you all to get involved. If you're a lender, please bid to participate in the pilot and consider how you and your partners could use and amplify our funding to serve your areas. And if you've got thoughts on the operational aspects of the scheme, please don't hesitate to get in touch. And if you want to tell us about your experience as a borrower, we'll be glad to hear your views. Your contribution is very much valued, so let's keep the conversation going. I'm confident that very soon, through our combined efforts, we'll be making a real difference to consumers and their families. And I very much look forward to working with you over the weeks and months ahead as we turn the plans that I've outlined into reality. Thank you very much.
So we've heard there that The journey really began back in 2015 when Adam Mooney, the CEO of Good Shepherd Microfinance in Australia, came and shared their learning around a no interest loan scheme with many of us here in the UK. And I know that many of you on the call today would have heard Adam speak when he came and have heard about the no interest loan scheme in Australia since. We just thought it would be helpful just for those people who haven't necessarily had immediate contact with the process of getting to this point, just to give you a sense of what's been happening behind the scenes a lot over a long period of time. So back in 2018, we worked together with StepChange to put together an initial proposal for the Treasury about thinking around what a pilot might look like based on that initial learning from Australia. The Treasury appointed London Economics to carry out a feasibility study, and I know many of you on the call today would have fed into that, helping shape the thinking and really importantly asking the questions, what do we need to test to see if an Australian success story could be replicated here in a UK mode? The Treasury, particularly with John Glenn's support, were able to earmark the funds, but of course COVID hit. And so it's taken quite a while to be able to turn that expression of interest from the Treasury into funding for the pilot. And so here we are now in 2021, and over the last year, Fair by Design, Fair for All Finance and Twinby Hall have been working both with the Treasury team and talking to many people across the sector and relevant stakeholders, including many of you on this call, to put together the initial plans for the pilot. And so thank you to everyone who's helped contribute to get us to this stage. And so the next step is, how are we going to carry on? What's the next point and how will we deliver this?
Thanks, Sean. I'll just start by talking a little bit about the customer need, which is really the basis of us deciding to go about this pilot. As the Minister outlined, that there's a real transformational impact where individuals can get a small amount of credit to get them through potentially a difficult month financially, to meet an unexpected expense or to deal with an income shock. So this can be really important for customers where particularly they don't have access to credit or other types of finance. And we see a couple of use cases in there, particularly around people who are declined for credit due to either affordability or credit risk, where with a no interest loan scheme, the affordability requirements are obviously less because there's no interest involved. And we think that this scheme can be a valuable alternative source of credit for those individuals who might be declined right now or might not have access to credit through traditional sources. So the idea of this isn't replacement in any way, it's to add to the current credit options out there. We see many people in the country who this could be beneficial for. I think in the original feasibility study it was just short of 500,000, but we know that there's 24 million adults in the UK with characteristics of vulnerability who, with a financial shock, could be in need of some additional support from something like a no interest loan scheme. So we really think demand is there, and we think that this can be a really important additional part of the credit ecosystem. So moving on to the next slide, that there's a particular I guess area of inquiry that we'd like to test with this, which is that demand for nils that we conceptualize is out there in the market, and that's really the first hypothesis that we go into this pilot with, that there's demand out there for nils. So that's something we'll clearly be testing through the process. Another key facet of a no interest loan scheme is clearly that there's no interest payment from the customer, so a large amount of subsidy is required from a funder to make the scheme work. We've got a hypothesis coming into this that the benefit to the customer of getting a loan and the benefit to wider society far outweighs the cost of that subsidy. So that's something that we'll be testing in detail as we go through, where we'll be covering kind of foregone interest rates, and that will mean that we can give these loans out, but in turn we need to make sure that that has the benefit to the customers that we expect. So the objectives of the pilot really link to those hypotheses that I just outlined, where we want to demonstrate that there's demand, identify the positive impacts to borrowers, and then work towards assessing the long-term sustainability of delivering a permanent nils scheme in the UK, which we very much think will be the case if the hypothesis that we've set out, that the benefit outstrips the cost, plays through into the pilot. So we've got lots more details to share, and Carl's going to talk some more about the customer use cases.
I think Carl has done the legendary not unmuting his mute button.
I did. Someone had to do it. I thought I'd take the hit on that one. So I'm gonna take the I'm gonna talk through some concrete scenario examples of where a nils loan might be needed and the user benefits therein. Take customer scenario 1. Take a single mother looking to return to work once their children is in full-time school. So the reason for the loan there would be for education and training purposes. The user benefit would be to increase earnings and financial resilience in the longer term. The wider societal benefits will include an increase in professional skills, reduced unemployment, and the wider local economic benefit of that reduced unemployment. On the second customer example, a victim of domestic abuse needs a deposit to rent a property. The reason for the loan is an unexpected essential cost. The user benefit is to secure housing and the impacts this will have on their mental health as well, family well-being, and proximity to work and the education and community setting. The wider societal benefits of that would include the avoidance of homelessness and the reduced costs to the local authority, and in turn reduced strain on other local services. And in our final third customer scenario, the sole earner in a family needs the car to get to work, but it needs expensive repairs. So the reason for the loan there is for an essential transport cost. The user benefit is to reduce ongoing costs through the use of, say, a laundrette, increased food costs and taxis, etc. But also the benefit of building financial resilience because that person isn't borrowing money from a high cost credit provider. The wider societal benefits are to reduce the person's need for other local support, but also they will contribute to creating wider economic benefits by using local services. So, and now we will discuss the potential solution that we want to test here.
So in terms of the potential solution that we want to test, we've tried to really give you a high-level summary here, which is first setting out, well, what are the reasons for the loan? So examples that were drawn out in Carl's examples just before in terms of essential items, rental deposits, unexpected expenses. From a customer eligibility perspective, we're really focusing on these two different aspects. One is the affordability decline. So we already know that there are an awful lot of people who apply to community finance lenders who get declined on affordability grounds. So is this a solution that could help those people have something that could meet their needs? And also in terms of lending criteria declines, whether there is an opportunity here for this product to fill a gap in the marketplace. The core product that we're setting out is one that is a loan that is paid directly to the customer, on average £500, but envisaging it could be between £100 and £2,000 depending on need, with the option for lenders and funders to actually add additional products based on local demand that really provide a holistic support to that customer. Customer referral routes. We've really identified from all of our engagements so far that there are a couple of routes that could be really beneficial. The first is those that come in directly from the lender, i.e. those who've been declined. But the second is really looking at charities, housing associations, local authorities, all bodies who are coming into contact with people in vulnerable circumstances who may not qualify for grants and other support available, and for whom this could be a really appropriate solution. And we're also looking at the ongoing sustainability of this scheme. And so ensuring that we've got other partners who are working with us in the delivery is going to be absolutely critical. And so that's everybody from housing associations to local investors wanting to really support regional initiatives, to corporate foundations, to local authorities. So we'll explore those a little bit more as we go through. So let's just delve a little bit more in terms of the customer journey, because we've heard from Carl in terms of some example cases, but what might that look like? And I know there've been a few comments. We are sharing the summary deck after, but there will be a much more detailed deck that will give you a more complete picture coming on the 28th September. So let me take you through the headlines here, and then we can move through some of the details in terms of how the pilot will work. So in terms of the customer journey, it's really sort of envisaging there are these two different aspects. One is a referral from a social landlord, a local authority, or another charity, someone else who's got knowledge of an individual and identifies that this could be a really appropriate solution for their needs. The other route being applicants who've gone to a responsible lender and who haven't either met the affordability criteria or perhaps the lending risk criteria, where again it's identified actually there is something here that could be valuable for them. Once they go through that, they'll go through the affordability assessment and sort of see where they are, and if they actually could qualify for a normal commercially available loan, then they will be directed to that route. If not, they will be looked into the affordability space in terms of a no interest loan scheme. I think the key thing in terms of this customer journey is that what we're trying to use this as a stepping stone for people to be able to build their ability to engage with financial services in a way that improves their financial situation. And so the testing point really around taking people through that customer journey, learning, have people been able to just pay as we expected from the assessment in terms of the no interest loan? Have they struggled? What do we learn from that? And how does that inform ongoing development of the product and indeed the future of the programme? So those are the high level customer journey. I know from many of the people I saw the guest list on the call, you'll have loads of detailed questions. So we will get into as many of those we can today. But if you want to get into the real nitty gritty, spoiler alert, the next webinar on the 28th September, we'll get into lots more glorious detail. But to frame that, to sort of set up what we're doing, let's just take a little bit more of a dive into, this pilot delivery structure. Why are we doing a pilot approach? Why are we doing this market engagement, and what do we need from you now?
Thanks, Sasha. So just to explore in a little bit more detail the pilot delivery structure, we're planning to have up to 3 locations in England tested and 1 each in Wales, Scotland and Northern Ireland. And the approach that we have to running the pilot overall is to work really closely with our partners Toynbee Hall and Fair by Design to make sure that we've got a good balance between a common approach to NILS so that we've got really good evaluation outcomes, but enough local customization and integration with other support locally that the offering is really effective for people in vulnerable circumstances in those local areas. In terms of the sequence that Sasha just highlighted, we've structured the pilot to anticipate that we get referrals from local agencies. And we've included anticipating those coming from local authorities, housing associations, councils, but they could also include charities and others. And then a second route for NILS borrowers coming through declines. So where a lender is unable to approve a loan that someone has applied for because they can't meet the affordability criteria, that being a second step. The intention is that community lender is then enabling that borrower to pay back on a flexible basis, recognising the volatility in the circumstances of some of these borrowers. And our hope is that over a longer period of time, once that initial NILS loan is paid back, the lender can enter into a longer term relationship with that borrower, hopefully moving them into other financial products, be they commercial loans, savings products, or other things that help with their resilience. I think really important to mention that we are very clear that the costs to lenders are significant, both in terms of a higher cost to serve for this customer group. We know it's difficult to make those affordability assessments accurately. We know that wraparound support and referrals into other complementary offerings is time consuming. And we also know that it's important to cover the risk in terms of bad debt. So in our second webinar on the 28th, we'll be covering all of that in more detail to explain how the funding mechanism and the fee structure sets all of that out. So I'd just like to cover off in a bit more detail our approach to piloting. Delighted that so many of you have joined us today. And as Sasha said, our intention through this market engagement is to take your feedback and to refine our thinking so that the pilot parameters and our assumptions are really tested before we start procuring NILs properly. When we have the pilot underway, we're going to be working with the lenders to refine our initial product design thinking, to iterate it constantly as we go through, and to build the case for a long-term NILs solution. Couple of key points. We know that procurement takes a long time. It's a big investment of our time and of those who want to bid. So we've structured the contracts for this pilot to include the option for them to be extended for a further 5 years and to be scaled up in so doing. That means that there's a really big budget envelope, which gives us the flexibility to take on board additional funding as it becomes available and to enable the continuous delivery of NILs. We also recognise that it's really important that the lenders that we appoint have a very close affinity with the borrowers whom we're trying to help. And for that reason, we've included in the contracts an obligation to meet our mission and asset lock, which is part of Fair for All Finance's overall strategic positioning. In headline terms, the budget envelope could be larger. It's one of the things that we're talking about in the market engagement. And we're also very conscious that it takes quite a long time to get a pilot of this scale underway. So in the meantime, we've appointed a credit union to work with us to trial some of the product design thinking that we already have through an initial proof of concept. So who do we want to work with to deliver this pilot? I think we've already mentioned in a couple of places that it's really important to have a blend of stakeholders involved, and John Glenn mentioned that in the Australian context as well. So we know that working with community lenders will be imperative to make this work, and we hope that NILs will be an additional and complementary product to those that they already offer. There's also going to be an opportunity to work with those lenders to pilot other non-NILs products. And again, that's about us making the most of the procurement, but also giving us an opportunity to test things that we think might also be useful for those borrowers. For example, consolidation loans. In terms of working with referral partners and co-funders, we think that local engagement is really imperative, both in terms of ensuring that the NILs offering integrates with local support, but also to make sure that we have long-term funding commitments so that NILs can scale beyond this pilot. And we think a partnership approach across the piece is really important. So that's why we're very keen to see co-funding bids coming forward from lenders working really closely with other partners. So what needs to be true for success? We've set out here in this diagram the kind of 4 prisms through which we think NILs needs to be sustainable in terms of the longer term scale. From the lender perspective, as I mentioned, we know that costs need to be covered, that there needs to be an opportunity to build a long-term relationship with the borrower, that there needs to be support from the regulators in terms of how affordability assessments are done for people in vulnerable circumstances. And we know that the referral process needs to be really slick. From the referral partner perspective, we know they want really clear, transparent referral criteria, great training and insight in what's happening. Are the referrals actually working? And integrated customer journeys to make sure that there isn't too much friction between the handovers from one to another. From the co-funder perspective, as both Sian and Tom have talked about, we know it's really important to evidence the long-term wider impacts, both societal and economic, and that we can target NILs at the people who need it most while delivering it with good value for money. And from the customer perspective, last but certainly not least, it's really important that NILs loan decisions are made quickly, that funds are dispersed rapidly, that there's flexibility in repaying, and that people have agency and dignity in that application process, that they don't have a sense of being judged. We also want to ensure that NILs is used in the right place, and that means making sure that a NILs loan is the appropriate solution rather than a grant or some other source of support that could be an alternative. And that's why working closely with local partners and making sure that the lenders have that understanding of what the alternatives are is a really key part of our decision-making criteria for the pilot appointments. So how are we going to evaluate if we've actually made NILs successful?
We heard John Glenn talk about the amazing outcomes and impact that Nils has achieved in Australia. And for us as a delivery group, it's really important that we can evidence whether a similar programme in the UK does or doesn't have the same impact. So we're going to take a twin approach. We're going to evaluate impact on individuals, looking at all of those factors around resilience, financial well-being, wider well-being, and everything that you'd expect us to be thinking about. Does it make a difference for the customer? We also want to assess what's the societal benefit generated by a successful Nils intervention. Does it reduce the costs to support someone through, for example, homelessness services? And then secondly, building up to the pilot, we could see how many answered questions there were that made it really hard to design the pilot. And so the second aspect is a process evaluation. We're taking an agile approach to that. So we'll be exploring all the way through the pilot what isn't and isn't working, and feeding that back into the delivery team, into the lenders who are taking part, into the referral organisations, so that we can make adjustments as we go, so that by the end of the pilot, we should have been able to improve the pilot throughout its life and therefore can scale up better. The other question that we want to ask is, are there borrowers who are prevented from participating, and what's getting in their way? Could we remove those barriers? So we'll be thinking about that through the process evaluation. And then finally, what do we need to be able to give organisations to enable them to participate at scale and to be able to make a Nils pilot turn into a Nils programme on a nationwide level? Finally, we'll be using the MAP tool, which Toynbee Hall has developed, which is a holistic approach to capturing the impact on someone of a financial intervention. And we'll be able to share that data across the pilot between organisations so that everyone can learn from each other's experience. What's next?
So what's next? As I said earlier, our next webinar on the 28th of September, we'll really go into the detail of the procurement, the funding model, the fee structure, the delivery approach and the contracting arrangements. And after that, we'll publish what we're calling a market engagement pack and a draft contract to get your feedback on. Why are we doing that approach? It's really because we know that there is a wealth of experience on this call, and we also know that procurement is a big exercise for everybody. So we want to set that up for success. And we think the best way to do that is to be able to lay out for you, look, here is how we're thinking about it. Here are our assumptions. Help inform us, help guide us to make this even better, such that it sets people up to be excited to bid and to set us up to really learn as much as we possibly can from the pilot. I've seen that there are loads of questions coming in, so we will get into as many of those we can today. In terms of the pack that will be coming out, what we're setting out is really to be able to get your feedback by 18th of October. And the important part of this is that the point of this webinar really is to whet your appetite so that you can make sure that the right people on your team join that next call and have actually got a bit of time planned out so that they can actually take a look through the detail, so they're really equipped to give really helpful feedback so that we can set this up for success. Once we've got all of your input, we'll process that and digest it, and then we'll be issuing an invitation to tender around mid-November with bid responses due back in late January. Timed like that because we know that everybody is working their socks off, and we didn't want to set deadlines that meant that we had to cancel Christmas for working reasons. So hopefully that makes sense in terms of timings. So in terms of the balance of our time, what I'd like to do is now sort of take it into all of the different questions. I've got 41, so this is where I'm now sort of stepping into the hot seat of thinking about them. One that I will just answer up front, there was a question in terms of why is it taking 3 organisations to deliver this? And it was really from a practical perspective to say that we actually needed different skills. If we're really going to use this to test what is a sustainable model, that we need brilliant product design skills, which is what Carl Packman and Fair by Design bring. The clue is in the name. And also fantastic experience in really understanding lived experience and testing evaluations so that we can really make sure we understand whether we're having the impact that we intended, which is what Toynbee Hall are bringing, as well as the coordination and drawing everything together, which is what Fair for All Finance are bringing. So hopefully that gives you a little bit of an insight. But let's pick up first of all. I think my board commented that this was one of the first press releases they'd seen with all of the nations actually saying positively this is something we're excited about. So Kate, there are a few questions here in terms of Northern Ireland, and I think maybe if I can bunch them together, I know you've had a chance to peruse them, so maybe we could just pick up some of the Northern Ireland specific questions first, which are really around the eligibility criteria in Northern Ireland and how many people we think might be eligible, what impact that might have in terms of existing lenders, and I think those are the critical ones at this stage. So Kate, if I can hand those ones over to you.
Thanks, Sasha. So I think lots of these questions are really helpful because they're actually at the heart of what we're trying to do through the market engagement, which is really to unpack some of our assumptions, tease them out a bit further and get insight from yourselves. So the second webinar will be delving into both the kind of eligibility approach and the fee and funding structure. And we've also got a set of questions for attendees on this webinar, which we hope will help us refine some of that thinking. To touch briefly on a couple of the questions that we've had here. In terms of the analysis and information, we've had really helpful conversations with contacts throughout the devolved administrations. I know my colleague Tom would be happy to kind of touch on that further. So we've got some existing insight of what's happening on the ground. We've also had conversations with lenders across the UK, and that's been quite insightful to inform our thinking. In terms of the specifics around the eligibility criteria, one of the things that we're looking at, which Carl touched on in terms of the use cases, is really where do we put the emphasis in NILS? And that means there's still some flexibility about how we define that eligibility. But broadly, what we're talking about are people for whom a commercial loan is not affordable, but one where a NILS loan where the interest is removed does make it affordable for them and is going to make both a societal and an economic difference in terms of sharing that lending offer with them. Tom, do you want to comment further?
Yeah, thanks, Kate. And I think the key thing is that ultimately it will be local lenders delivering this with local referral partners who know the local context and are able to tailor the outreach to customers and the kind of product setup per that local environment. And that's why we're going out and seeking partners and doing it in that way. I think just touching on another impact to lenders that's come in as a couple of questions, I see this as hopefully a useful additional product to lenders, as opposed to like replacing anything that's going on now, and it's providing a good service to customers. It's providing something else that could bring customers in the door and hopefully bring them through a journey with you as a lender where they can eventually get access to the more typical commercial loans. So the idea of this is that we're widening access as opposed to constraining in any way. Yeah, I just thought I'd add that point there. I think is it Sean, you're taking the next one with regards to the Good Shepherd scheme.
Sure. So we've been asked about the fact that the Good Shepherd scheme doesn't actually give cash loans, it gives goods. And so someone applies for something that they need and then Good Shepherd pays for that and then the customer repays. But we've gone, as you can see in the pilot, for cash loans. So we've done a lot of thinking about this, and I think the simple answer is that we strongly believe that this is an opportunity to help a customer do two things: to demonstrate their ability and willingness to repay, and also to build their credit score. The other angle on it is that we also all as organisations take an approach to lending, which is that borrowers are independent adults and can be trusted. And it's when something goes wrong that you explore why it's gone wrong, rather than starting out believing that they can't actually be trusted with a loan. So for all of those reasons, we've gone for cash loans rather than only giving people access to goods. And of course, we'll test that through the pilot to see if those principles and assumptions are going to lead to good outcomes or bad outcomes, and then we can adjust accordingly. I'll just quickly say as well, people have asked in here about why we're offering training and education loans. Because some people can't get grants and can't access affordable training and education. And we genuinely believe that the NILS pilot in Australia, the NILS work in Australia, shows that that's a really important outcome. So we've included that in the kind of things that we would imagine people might borrow for. Thanks.
Brilliant. Thank you, Sian. Right, questions are still coming through thick and fast. So those we don't get to, we will do a follow-up Q&A to pick out those answers. And I'm going to focus on those that are really sort of going to the heart of understanding how we take the pilot forward. I know there are lots of questions and views in terms of genesis of it, but I think that I just really want to make sure that we're focusing on getting the input that's going to help us really develop in terms of the market engagement. So one of the next ones was really sort of picking up in terms of, you know, one of the challenges that I know that's been a big one for a lot of lenders, which is reporting to CRAs in terms of people's lending, but also whether affordability claims could be made to FOS. So Tom, would you like to pick that one up? And then after that, I'm going to come back to Kate on quite a lot of the ones in terms of operational underwriting and all of those.
Yeah, sure. Thank you, Sasha. So on the regulation side at a top level, we're able to use a lot of the kind of existing setup in terms of the regulatory framework for lending, which is great because it means there's not much bespoke work that's required for the no interest loan scheme. So on those areas such as could claims be made to the FOS, yes, because we'll be part of the consumer credit setup. And if other loans could be made to the FOS by other claims could be made to the FOS under the guise of that lender, then that will be applicable to NILS too. Clearly, we'll be setting out how affordability should be done as part of our procurement criteria, and we'll be really on top of how that affordability process works. There's a similar answer there with reporting back to the CRAs in terms of the data. And as we mentioned before, what we'd really like for NILS is that this builds up an individual's credit score such that they can go on to access other products and more mainstream credit options. So we would like reporting back to the CRA as part of the scheme and part of the lending operations for the partners that we procure.
Brilliant. Thank you, Tom. Kate, do you want to pick up? We've got quite a lot on the operational side, which obviously, as you said, is a key part of the market engagement in terms of, you know, how do we make it work? And I think it'd probably also be quite helpful if you could pick up. There are quite a lot of comments coming through, I suppose, specifically on the affordability side, but maybe less so in terms of the second criteria, which really picks up the fact that there are an awful lot of people who are currently declined because of credit risk reasons from credit unions, and this is the kind of gap that we want to really test and learn from. So I just wonder if you could pick up those that are really looking at those aspects in terms of affordability, debt collection and underwriting. I'll let you read them out as you address them rather than me wasting time repeating them.
Thanks, Sasha. There is a number of them. So I think perhaps if I just set the scene a little bit more generally, and then we can kind of come to any specifics that I haven't covered. So in terms of underwriting, the approach that we've been really pleased to agree with Treasury is that there will be guarantee funding for the bad debt that arises out of NILS. But we recognise that there still needs to be an incentive for lenders to lend well and for collections to be done in a way that's empathetic and helps borrowers get back onto a new plan where that flexibility in repayments is really necessary. So we'll cover that more in the second webinar, but I think it's fair to say that we have come to a really good place in terms of de-risking the testing of this proposition. On affordability, I don't think it's our intention to be prescriptive about how affordability is done. We recognise that lenders have a huge amount of insight in terms of doing that effectively. We want to work very closely with lenders in terms of how that works in practice, and we recognise that there are very specific borrower circumstances that need to be taken into account in a way that examines affordability effectively. So there is a balance for us to strike in terms of what we are setting out as, if you like, the core parts of NILS that are done consistently everywhere, and those that need to be moderated to take into account specific customer groups and particular local settings. So that's my kind of reflection there. And in terms of the wider points about incentivising that kind of collections approach and making sure that integration and affordability assessments are done well, part of the fee structure is going to be an incentive payment, so that there is an element of making sure that those things are done really effectively, rather than just paying a unit cost for each loan, if that makes sense. So I'm going to pause there and just see if that's done justice initially to those questions, recognising that we've got another hour on them next week.
Yeah, brilliant, Kate. The only joy of these webinars is sometimes you just like to be able to see everyone on the call, so you give us a thumbs up on which I can't. But I think that, you know, as we get into more of the detail in the market engagement stuff that we're going into next week, it is setting out how we're seeing the business model so far and what that looks like in terms of underwriting. So hopefully that will give you loads of detail. I'd also really like to thank, there are quite a lot of people who are actually giving comments, which are sort of lessons learned from other things or ideas on things to be things that we could really factor into the design. That's exactly what we're looking for. So please do keep those coming, because that's what will help us learn from the richness of all of your experience to really learn from it. What I'd like to do maybe next is just take us into some of the questions really in terms of the partnerships, but also in terms of you know, some of the questions in terms of, you know, are we taking away credit union customers? I think the key point here is that these are the people that you can't currently serve, either because they fail your risk criteria or they fail your affordability criteria. Clearly, on an affordability criteria perspective, people who would otherwise have gone to high cost lenders or potentially to, you know, lenders that are beyond the credit union bar, there will be a bigger differential. So that's an absolutely spot on and fair comment. But Tom, do you want to just pick up some of the questions just really around partnership approaches, and also the one of, have we already decided who we're going to work with, and this is a bit of a sham process. So if you want to just pick that up, that would be fabulous.
Thanks, Tasha. I might take the easiest one there first about if we've already decided who to work with. So the answer to that's no. In short, where we're going through a full tender process for the lenders that we work with. We have engaged with some lenders that we know already during the early design phases around kind of how to make this work from a lender perspective and what the requirements for a lender should be, which will all be in the procurement. We've not pre-baked this in any way, and it's a full competitive tender process which meets public procurement standards. So so everyone has the same ability to kind of work with us on that. Related to that's a question that's come through on how we will select locations, and I think we're still fully designing this and obviously asking you questions about how to do it, but we think the best way to do that will be to ask you what the local need is in your areas when it comes to applying to work with on the pilot. And that local need is a really key element of making this work. So we'll need to see evidence that there is the kind of the right customer groups there who might be able to access NILS, and we'd like our partners to think about that with us. There's a couple more questions there in terms of referrals into the scheme. One from a housing association perspective and one from a high cost lender perspective in terms of credit brokering. In terms of, I guess overall on referrals into the scheme, we've designed it such that the two target groups that we're thinking about, which are local authorities and housing associations, are not included in the kind of requirements for credit brokering, that they've got specific exemptions there, so that we won't need kind of further exemptions in this pilot environment, which would slow us down. So that's why we specifically are reaching out to local authorities and housing associations to help us both potentially co-fund the scheme, but also refer into the scheme. In terms of those partners, it will be based on your commitment to kind of referring into the scheme, and also the kind of local need in the area. along with the strength of the partnership with the local lender and that proposed setup. We'll talk more to that in the next webinar, but that's that at a high level. And we think this is a really good opportunity as well to get some joint working going between perhaps housing associations and councils and lenders who might not work together already. So we'd love to see that as part of the next phases. And that covers the question in terms of high cost credit referrals potentially, which again, I think definitely could be part of bids, but that credit brokering license would be needed if that's not in place currently.
Brilliant. Thank you, Tom. And I think there are a few questions to really in terms of the responsibility of lending. And if I maybe just pick that one up, which is that what we're fully expecting in terms of design is that we're ensuring that people have had the opportunity to access other forms of support in terms of grants, etc., before coming into this route. And that's one of the reasons of working with referral partners who will have already spent time with individuals to see if they qualify for those, and if not, whether this could be an appropriate route. And I might just ask Carl to speak a little bit about that, just in terms of the product design, and also sort of what else we might want to be teasing out in terms of product design as we go into the market engagement phase. Carl doesn't look at the questions as he goes through, so it distracts them. So I'm just talking a little bit to let him gather his thoughts before he responds to that one. So Carl, over to you.
Oh, that's very kind. One of the most important things for us in terms of this is to make the product inclusive and to bring inclusive design into the way in which we're looking at this. And what I mean by that is to make sure that we aren't just imposing products and services on an assumed consumer, assumed customer, but actually work iteratively and through an inclusive process with beneficiaries and those who we feel would be beneficiaries of a no interest loan scheme product. So actually working quite closely to kind of build that experience, lived experience has been mentioned before, into the product itself, into the no interest loan scheme product itself, will make this product from the outset fit around people's lives, rather than just assuming that we can create something, we build it and they come sort of thing. So we want to build that right in the process from the outset. And that's the inclusive design process that we think is very key and unique part of what we have to offer in this. So we'll be working with lenders closely as well to make sure that can happen on that principle.
Brilliant. Thank you. Thank you, Carl. I'm mindful that we've got 3 minutes to go, and that many people are now operating in a hybrid world where we're trying to manage online as well as face-to-face meetings. So I think I'll probably pause there in terms of the questions, and we'll pick up, I think quite a lot of the ones that go into a bit more detail are perfect for going into as we delve deeper in the next webinar on the 28th of September. I think I just regroup in terms of, the hypothesis here is that there is the opportunity for a product that fills a gap in the marketplace for people who aren't otherwise reached by grants and other products, but also aren't able to be served by the current options in terms of credit, for whom borrowing a small amount of money where they can actually build a track record of paying it back could make a real difference to their lives and provide a pathway into sustainable engagement with financial products and services. Is that true? That's what we're trying to test. And with your help, we'll be able to make sure that we can both design a bid process that sets us up to get people stepping forward who are really up for trying to test and learn, but also so that we can actually really learn and understand, some of the questions around sustainability. We don't know what we will learn from this. We may learn that, what we're envisaging fills a perfect gap. We may learn that actually there is an element of subsidy needed. This is really for people who are actually excited to be part of something that lets us test and learn what could work, so that we can understand, if it does work, what it would take to scale. And as a number of you picked up, what we tried to do in the procurement process is envisage that There are a number of different products and services that would be brilliant to introduce for this customer group. They tend to be under-researched and under-designed, and so this is providing us the opportunity to develop partnerships, to really learn and work to build products and services to help this customer group. I think that's an exciting journey. I know that there will be bumps in the road. We won't get it all right, but with your help, I think that we will be able to do something that really helps us to understand what works for people who need it most. So thank you everybody for attending today, and apologies we didn't get to all of the questions. I just really appreciate all of the engagement, and look forward to seeing you and your teams on the 28th of September. Thank you.